Thank you everyone for joining today. So we've got a very illustrious group of folks here who are going to talk today a little bit about this amazing kind of new opportunity ahead of us, which is how to sort of unlock payments in using Web3 technology. So maybe to start off, Bizola, do you want to give like a 2-minute intro on what you're building and what you're passionate about sort of solving in this space?
Yeah. Can you hear me? Or? Hello? Yeah, I think this one works. So I'm one of the co-founders of Super, and what Super is a fiat and crypto billing platform. And what that means is we help Web3 merchants to accept both crypto payments and fiat payments, typically through Stripe, integrated and centralize all their payment data in one place so they can scale more easily. My background is classic TradFi, so I spent a bit of time at JP Morgan, and then moved over to EY, Ernst & Young, to help overhaul their legacy payments and billing platform. And after that, also bootstrapped, scaled, and sold a previous Web3 edtech. So I've really seen payments and the challenges of payments all the way from a large enterprise to a small startup, and so happy to contribute what we're learning over at Super.
Yeah, I'm Stefan, co-founder of Gnosis and Gnosis Pay. With Gnosis Pay, what we try to do is we actually create programmable money. So probably all of you have read the Bitcoin white paper. Satoshi Nakamoto created Bitcoin to create an electronic peer-to-peer cash system. Unfortunately, today it's mostly used as a store of value, and actually no crypto is really used for payments. We try to kind of remove the gap between on-chain and off-chain payments. And the first product we are launching in December is the Gnosis Pay card, which allows you to spend crypto from your self-custodial account, like from your safe contracts.
Hey everyone, my name is Ruka. I lead growth for Karpatki. Karpatki is the leading DAO finance service provider. We work with obviously Gnosis DAO, ENS, COW, Lido, Balancer. About my background, I was a founder of a payment processor back in the day, actually, that's right now connected, curiously enough, to this Gnosis project. Company got acquired by SaltPay. SaltPay, decided to merge the company, and I was super interested in DeFi, so I started investigating, researching about intersection between DeFi and payments, and this led me to interact with Marcus and Mattia, founders of Gnosis Pay projects actually, and later on, this guy here introduced me to Marce, Karpatki's founder. Had interests in DAOs and DeFi and the intersection between both, so it became clear to me that I should move forward and start contributing directly to Karpatki, and that's been it.
Hey, I'm Ben. I work with the Circles team. Circles is a UBI project that tries to build a grounds-up UBI. So instead of having a global registry of who is a unique human, it's a local civil resistance property that we build. Over the years, I've maybe embodied the gradual full decentralization. I started several years ago with like bank clients, enterprise clients, and then moved towards like mid-scale companies and trying to integrate payments into existing apps of millions of users. And then gradually, I only do protocol. I've always been protocol, but I think gradually we'll get to the place where protocol is sufficiently good for UX to enable payments.
Great. I think a little bit. Great. Thank you very much. So maybe to start us off, we could start at the very high level, and you all could share your thoughts on why crypto, or why payments is such a fundamentally important use case for crypto. And we could look at this through a utopian lens, principled lens, or also just a very pragmatic lens. So, I don't know. Ruka, do you want to start us off?
All right, I'll give it a shot. This comes from a personal perspective. For me, the interest in crypto and the intersection between payments and its ability to solve the industry was about creating the means to provide a more efficient way for people to exchange value, right? I like to think of payments as the engine of the economy. Right now, it doesn't feel like a lot of people are participating, at least in equal terms, so to speak. So it depends, really, depending on the geography, life standards, economic background, whatnot. It shouldn't be like that. It should be open. It should be permissionless. It should be accessible for everyone around the world. It's just that we're not there yet. And yeah, it seems to me to be, or to have the potential at least to become the rails upon which sort of this global network of payments works. That's it.
Okay, so why would it become the rails? Like, what is? I mean, and I'm happy for anybody else to take that question. Like, what are the pragmatic advantages that we could imagine coming out of a sort of global payment system that is powered by crypto? So. Yeah,
you can go.
Okay, you have to, put the reins on me. I can speak eternally about the topic. So first and foremost, I came, from, the industry, right? So I totally have a different perspective on this. One that really comes from the fact that, there is a 70 years old industry that has created one of the most powerful networks I've ever seen. That a lot of big companies try to compete with without any success whatsoever. So it's a pretty mature market as it is right now. Specifically in the more developed sort of economies, right? But then there's the rest, right? Then there's the emerging economies and all the necessities for people to have access to a bank account in order for them to execute electronic payments and whatnot, right? So there's that aspect as well. But the thing that I find most interesting is the fact that really, outside of this small bubble that it's called crypto, people really don't giving or understanding the benefits because of it being so accessible right now, right? So in order for this to become sort of mass adoption, it's got to, offer its specific value, right? And by value, I mean, not only cheaper payments, because that would be, the first, answer that we were trying to, the first challenge that we were trying to meet, but also integrated with any, vertical from finances related, right? So becoming this entry point for you to be able to go through your everyday life and having access to sort of efficient financial products and whatnot, right? Yeah. So it'll only be successful in that potential scenario where it becomes more efficient than what's there already.
Yeah. So does anybody else want to speak to the efficiency gains that we could sort of imagine through crypto as a foundation for payments? Maybe to Stefan.
Well, I think, as Ruger mentioned, obviously there's a duopoly right now in payments, MasterCard and Visa. And if you look at which kind of parties are involved in any kind of transaction that you do, then there are usually 5 to 9 middlemen that take their cut in all of those transactions. And ideally, transactions should be peer-to-peer, like we can do them already today on blockchain, obviously. But what is missing to make it more accessible and actually allow people to spend their money that they have on-chain anywhere else. So I think, for me, there are two perspectives. One is, we as a Web3 industry, we have to make what we have been building more accessible to gain more users. And that will allow many more use cases to actually work also based on crypto. I think a lot of use cases just need more users to actually be viable. So lots of projects were started around ticketing, for example, or hotel bookings, and all of them, they don't make any sense if there's hardly anyone onboarded to our infrastructure. So I think payments is a great way to onboard more users because it's something that you do on a daily basis. And I think every one of us is using their credit card many more times compared to their private key to sign an on-chain transaction. And so I think from that perspective, payments can enable us to just allow many more use cases to be viable. And then I think, again, we at the same time have a lot of inefficiencies in the current payment system that are kind of ripe for disruption. And I think a lot of merchants are suffering from like the monopoly that's existing and that forces them to play by the rules by those two big giants. And I think hopefully we can offer at some point really viable alternatives to those.
Great. How do I put it? Let's see. I think maybe the next question I'd like to lead us into is around the sort of challenges and sort of usability issues that are currently sort of blocking this wider adoption of crypto. So, Zola, I know that you do a lot of work with Super around sort of how to make it easier for merchants, for example, to accept payments. So, yeah, do you want to give us your view on that?
Yeah, I think when we think about payments, really, you have to stratify that into the merchant side, on the consumer side. And so I spend a ton of time on the merchant side. I think the biggest barriers today really is these merchants already accept fiat payments. They already have Web2 tools like Stripe, QuickBooks, Xero that they're used to. And the challenge is the Web3 payment tools don't integrate well with them. And so this really increases the inertia on their payment ops. But I think that's lower level thinking. I think the broader challenge with Web3 payments is actually distribution access. So when you look at historical payment networks, they tend to be more top-down in distribution. So for example, MasterCard and Visa, or the credit card networks, and then ACH in the US. In the 50s and the 60s, Visa, MasterCard, how they gained distribution essentially is just mass mailing credit cards to consumers. Whereas with ACH in the 70s and the 80s, how they gained distribution is the government incentivizing the adoption of the network through social security programs. And so I think when you look at that top-down distribution, Web3 just struggles because we're more bottoms up. We don't have large-scale access to those consumer accounts in the same way the FIs or the governments do. And I'll be more interested in focusing on solving those distribution challenges. And I think you see more sophisticated players like Circle solving that problem. But I think that's where the higher level problems that we have to solve first before we go low level with the UX, I would say. My thoughts.
Great. Anybody else on fundamental sort of usability challenges?
Right. Thanks for giving the pitch there. I mean, to the very first question, like payments is just use case number one. Like it requires in principle only two parties, although there is a lot of intermediates in traditional payments. But I think as much as there's inefficiencies with the existing payment systems, there's also a lot of inefficiencies with our Web3 systems, and they're probably bigger because that's why we don't have massive adoption yet. So for example, like if you have an open peer-to-peer system, then I don't know which token on which chain you would like to accept. And so there isn't smooth handling of actually paying you in your preferred currency because it's bottom-us up. There's tons of them. And so the negotiating that, just paying your friends is just easier to give them euros or lira. And then when it comes to integrating into existing Web2 infrastructure, like there's regulatory constraints, of course, as well, but just the user experience needs to be effectively like a one-click experience, and you need to marry that with non-custodial assets. Yeah, we're almost there. Like account abstraction is a great move forward, but I'd say that as maybe, yeah, we're getting there, but it's not solved.
Yeah.
Yeah, I didn't pitch my own circles now, but like.
Yeah, maybe you can tell us a little bit more about. Circles.
Yeah, I mean, so one interesting story is if you have a base currency that's accessible for everyone, then you can onboard your users just through a friend's invite. Because as soon as someone invites you to the app, you have some base currency to pay for the gas fees, for example, and you can start working within that app without needing to either be signing up with some email to be spam resistant or without needing to go to some centralized exchange to buy the specific ICO token to access the app. So I think there's interesting onboarding stories around having a UBI. Even if it's not worth much, it might be enough to smoothen sort of the UX experience.
Lovely. Yeah, Ruka, do you have any views around, I guess we have sort of a consumer adoption as the path to sort of scaling payments, merchant adoption as a path. Where do you fit on that spectrum?
We can go back to the traditional fee structure to get a hint on when you kickstart this two-sided network, right? Because along the way, fees have been adjusting, and they've adjusted around 80%. So the merchant service discount, so it's the fee that you collect from the merchant that takes on every stakeholder's services. Out of that entire fee, 80% goes to the issuing side. So that can, give us a hint on whether, the networks are placing their biggest investment, which is in the consumer side. And sort of makes sense, right? Because myself as a consumer, I'm the one deciding which payment method to use in a specific economic transaction, right? So I exert some sort of a pressure into pushing that specific payment method. And there's marketing, distribution, investments in terms of payment instruments per se, right? But then there's all the insurances, all the those mild programs, all those incentives that at the end of the day get subsidized by the merchant side, by the way. But they sort of lock in, starting from the consumer side. And if we are to take that as sort of a premise, then I have zero doubts that we should, mimic the same behavior, starting from, taking on Web3, right? And that's exactly what Gnosis is doing right now. I totally agree with the strategy. Where my concern is whether we're offering enough value for us to to go against, the current issuers, or we should sort of go on to this, B2B2B model where we, become the infrastructure and then we piggyback on existing distribution channels. That's you.
Yeah, no, I agree. Like, of course, I think it doesn't make sense to kind of replace everything at once. And right now, in fact, we are working with existing issuers in order to use their network and distribution channels. However, what's also always the case, if you work with partners, then you also you have to follow what they request from you. And most of them, I think, as soon as you talk to people that are not native Web3, they have many concerns, and you have to do everything according to their compliance, which then has obviously impacts on user experience. So in terms of KYC, KYT, all of those checks that users will have to do. So eventually it also makes sense to have some of those like in-house that allows you to define your own rules according to what you think makes sense. Of course, there's also an educational process involved in order to educate every of your partners to kind of lower the requirements to something that actually makes sense. But that has been really a big struggle for us because most of them do not care enough and they just have their own like view on things, and you have to play according to what they want.
Great. Yeah.
Follow-on question, just curiosity. Sorry. So are we sure that the value proposition is, sort of having a, custody over the funds, or having the ability to go on in the real world and to spend our crypto and whatnot? Because if it's that, like, we should have a specific strategy in place. If it's not, right, if it's the average Joe that, really doesn't, mind about, the source of funds, that just want it to work, then definitely we should get another strategy, right? So that's what's the value?
Yeah, that's a very good question. I would also argue that most people do not care about having self-custody. And I would actually argue most people are still prefer using something like a centralized exchange, even though at this point most people know it may not be trustworthy, because they are even more scared of controlling the funds by themselves and not really knowing the technical implications of that. So I would also argue for most users, that's not really a selling point. In my view, the selling point is probably for every user a little bit different because they're different user groups. And ultimately, what should kind of outperform the existing industry is the permissionless nature of blockchain. So with Gnosis Pay and all the partners, we for the first time actually have programmable money that everyone can extend according to how they like it. And so it basically is like a bank with an interface that is stable and accessible until, like, for the lifetime of the network, which hopefully is indefinite. and allows everyone to extend the experience with the services they think are interesting. And I think today we had a few good examples of this, like the new stablecoin that is yield-bearing that, for example, people in Turkey probably would like to have instead of their own currency. So I think there's a lot of services that have been built in the past that should create demand, but there's also not a single answer to this. But for me, it's also very clear, like just having custody over your own funds, that's not the selling point. The selling point is because you have custody over your own funds, everyone can extend the experience around it. And so it's basically up to everyone to add to this. And I think that's also why ultimately Ethereum became so successful. It's not because there was this one network, it was because everyone could deploy their own smart contracts and everyone could build on top of the smart contracts that have been deployed. That's why the Safe became so successful. And I think that's also why technologies that bridge into like regular payments and make it accessible and programmable can be successful.
And in your view, what are the other sort of ecosystem opportunities just for like builders in the room right now? I mean, yeah, where do you think people should be building in this space?
Very good questions. I think, I hope that we will have a lot more users that are actually onboarded to self-custodial wallets, and that should allow a lot more use cases that previously people tried but never succeeded. I mentioned before, there was a company that tried to do, like, for example, hotel bookings or whatever, like Winding Tree, and they've been around in the space for like 5 years and were never successful. Sorry. But the reason simply is there's no critical mass that can actually onboard to this, right? And I think Binance has obviously a lot more users. They have, I would say, they have a critical mass of about 100, maybe 150, maybe 200 million users. And they are able to offer a lot of services that actually make a lot of sense in most of those countries, like Binance Peer-to-Peer, super successful, Binance Pay, super successful. So they're able to offer all of this, and now I think our opportunity is to kind of replace Binance. This is kind of the first task, and then we can enable more of those use cases. So my view, the first task is, okay, we have to get more users into our space. That enables a lot more use cases. And then a lot of the things that have been experimented in the past make more sense. And then it's also easier to develop products. I think in the past, one reason why also I would say products were not as great is because you just don't have as much user feedback, right? If Facebook rolls out like a new feature or Instagram, then they can roll it out to like 50,000 people at once and see how people like this feature. In crypto, we just do not have this opportunity. And so I think it's kind of like, hopefully with more users will allow us to iterate much faster and just offer much better products. So I would say first goal is we have to still improve on wallet infrastructure to just onboard more users and then experiment with use cases that are more useful on a daily basis. I think in terms of DeFi, that has been a bit exhausted in my opinion. Like we have all the primitives that are needed and we just have to care more about distribution.
Great, lovely. I guess looking to the future, do we ever imagine a sort of an end state where payments are entirely Web3 powered, or do we expect that it's always going to be a sort of hybrid somehow? Bizola, do you want to take us off?
Yeah, absolutely. So I think from my position, it's definitely possible for us to see the full Web3 payments experience. I think we just have a few pieces that are missing. So I think if you look at Web2 payment rails, recurring payments are endemic to those rails, but for a long time we're missing on-chain. And then you've seen a slew of startups emerge to solve that problem. So even if we do have a few more features that are missing, for example, the privacy of our transactions, I think that these startups have shown that the space has the appetite and the willingness to solve some of these fundamental problems, such that we can, with enough time, of course, build the full end-to-end payment experience. Yeah.
Great. Anyone else with a Yeah, let's put it over to Ben. Okay.
I mean, I've been labeled the utopian vision anyway, so I will make a maybe a fluffy comment, but I think payments will never be solved in the sense that it's embedded in a larger context of power struggles and geopolitics, and so they will always be around. Hopefully, we build something that lasts, but the world will keep changing. So I think we will never end this this chapter.
Yeah, well, I not much to add here, but I think in general there is the possibility, of course, to let's say, at least move over to, let's say, a hybrid infrastructure. I think we see some countries experimenting with CBDCs now, and of course they're not running it on a public blockchain. They run it on whatever, like private setup or like more corporate like setup. But it's at least already kind of a step in the right direction, and potentially, I think it will allow us to have integrations into those systems. And so I think there's a future where more and more transactions will be purely like on-chain. What kind of network is a different question, but I think, yeah, in the future, most likely we'll have more things happening on-chain because of the transparency aspect as well, and yeah.
Great. Okay, another take. Okay, so a lot of the core usability issues have been solved with Web3 payments, right? So we have account abstraction, making account creation or maybe account recovery easier. We have fast and cheap sort of transactions. We have regulatory compliance in the sort of Euro E example. So does anyone have any theses about like how we scale from here? Like, yeah, I think there was, yeah, maybe let's start off with that. So now that a lot of the core sort of reasons why crypto payments weren't being adopted 5 years ago are resolved now, what is limiting this sort of explosion or like profusion of growth? So yeah.
Yeah, this one is quite controversial, but I think chargebacks are missing in the space. I think we swung too far where in Web3 we have this notion that chargebacks are a bad thing, but they're actually a good thing because they're a phenomenal tool in providing consumers with more trust with the merchants that they're transacting with. So a consumer in the US feels a lot more comfortable buying from a merchant in Brazil because Visa is the underlying rail and offers chargeback protection. And so I think that's a feature that's sorely missing today in crypto because it makes global commerce more liquid because the trust is friction. And so I think with crypto, building this chargeback, it sounds small, but I think it's quite significant. We accelerate the adoption, at least on the consumer side, when it comes to crypto payments. Yeah, chargebacks are missing.
You could just create the biggest use case for Clarus, actually, because it's and I know it should be fairly easy to implement this from a technical perspective, right? The thing is it trusted, trustless? What were we trying to achieve here? I agree that if we are to, create network effects out of consumers, we should offer them the trust. And obviously there should be some sort of reversibility built into the system, but then again you get a man in the middle, and then you have to trust that that entity will protect your best interests whatsoever, right? So it's not a simple one, I would agree, but that's just the C2B sort of space, which is kind of niche within this sort of payment industry, right? Because then there's B2B, which is and B2G, C2G, government, payments. So it's like each one have their own and specific purpose, use cases and whatnot. So it's a really big industry, and because of that, I really believe that it's really dependent on tapping into what's already there, because it kind of it was built for a purpose, right? It might be might not be the best solution, but there's a reason for that infrastructure to exist. So we should, take some of that experience and evolve instead of disrupting. So I think for me, that's the biggest lesson, and the reason why I believe in this project, like from heart. I think it's been out of all of the takes that I've seen so far, trying to tackle payments from a Web3 angle. It's the single one that I've seen with a long-term strategy, a short and a mid-term strategy. So in understanding and acknowledging that they would have to compromise in order to get, critical mass and kickstart sort of network effects. So yeah, I'm obviously biased, by the way. But,
yeah, maybe in terms of adoption, I think that's something that, well, we probably have to learn a bit more from Web2 as well. So, for example, for Gnosis, we actually do not have any, until recently, we had no experience basically with the marketing. We always had kind of organic adoption because we were first movers. And for Gnosis Pay was the first time that we actually did Twitter ads. We actually paid money for marketing. That's something we never did before. And I think this is the same not only for Gnosis, but for pretty much everyone else in the space. We have like zero experience in marketing in terms of how do we use existing tooling in order to drive adoption. So I think that's an expertise that we have to develop as an industry to make the next step. And then I think secondly, we have to also sort of find like Trojan horse strategies, how to piggyback on existing distribution channels. So why should this card not be issued by other banks, right? Like why not make other banks issue our cards and make them our customer? I think a lot of the neobanks are struggling to get adoption. Everyone understands that there's an opportunity in crypto, like Visa very well understands that there's an opportunity and they try to support everyone who tries to innovate in the space. They also support us. Yeah, I think we have to kind of use this to our advantage to promote and use their existing distribution channels to distribute our products, and then hopefully make those users also owners of their own funds, and then we can start promoting everything else that we are also doing.
Great. Yeah, I guess it is sort of in the pragmatic spirit of the title, right? The sort of Web2 in the front, Web3 in the back. So great. That might be a good place to sort of start wrapping things up. I think we're around time right now. Questions? Is anybody in the audience keen to ask anything here? Probably have time for one or two questions. Yeah?
Hi, great panel, great content. What do you think about Coinbase and the launch of attestations and basically like streamlining KYC a bit? Because Ruka, you were talking about payments and then daily life and daily finance, but daily finance requires, unfortunately, eventually will require KYC, looking at how permission DeFi is currently, in the direction it's going. So that's the first step for...
Yeah, no, thank you for the question. I think it's a great initiative. Actually, Binance has been doing something similar. So you could kind of have your KYC on Binance Smart Chain as well, for example. And I think it's great for user experience because ultimately, like the user should own this data and be able to reuse it in other services. So for example, for Gnosis Pay, we're also integrating different services. We have the card, but we also have a way to issue an IBAN for you. And we don't want the user to go through KYC twice. So we kind of passport this KYC data between those services. And I think if we have a discussion between our compliance officer and the Coinbase compliance officer, we might just also be able to use whatever Coinbase is attesting to the users. It kind of goes back to the question of like, do you have the issuance license in-house or not? Like if this partner then also accepts this kind of compliance data, but ultimately I think that's the right way, the right approach, simply because it allows a better user experience, and that's ultimately what we should do. We should try to have a better experience than the other services out there. I mean, right now, every time I want to use a financial service, I have to go through a separate KYC process, which is really annoying. And if you can reuse this data, great. So I really appreciate that Coinbase is doing it.